Hello, my YouTube friends, and happy Monday. What an exciting Monday. I assume you're all watching the market pull back. I see some great opportunities and some things going on sale. And I also want to talk about a little bit of the option strategy I've been implementing in MicroStrategies. A couple of you sent me some emails, and one person made a comment in the comment about some interest in what I'm looking at and what I look for in terms of trading options. So stick around. Should be a really good video today.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
So, huge pullback in the Nvda stocks today, which I'm actually really excited on some of them. And I started a position in Nvda. Now, again, as always, this is not financial advice. Please do your own research. Reach out to your financial advisors when making any financial decisions that you guys are making. Everything is individualized for what works for whomever. And what I do is just what I do for me. And I'm just sharing it because it's worked. And I like trading and I like to talk about it. And I seem to have some people who find some interest in that. But by all means, really, you need to do your own research. And on top of that, you need to be really introspective about your personality and what fits you, as well as what you're comfortable doing and what your overall financial picture looks like. You know, when I put on these trades, just to be perfectly frank, it's even though I live in Las Vegas, it's similar going down to the casino, but I think I have better odds because I know my track record over the years. Now, that being said, I'm comfortable making those bets. I'm not going to make a bet that's so big that makes any difference in my life, but it's fun, and I tend to be able to do okay over time. So that being said, Nvda looks like it's really on sale. Anytime I see a company as good as Nvda fall as much as they are today, based on the news that's coming out on CNBC and the others, that China essentially came up with an AI chip or an AI program that seems to be ahead of where we are, I'm not sure that I'm going to see that impacting Nvidia's earnings all that much. In fact, in some ways, it may push people to compete harder and start spending more money on chips and pushing the US side to actually start pushing things along a little bit harder. So I think it's actually potentially good for earnings. And I guess we'll see that going forward. But the stock is off something like 18% today alone, which tells me there's also too much trading and froth in the market. Because if people are not investing in a company and they're not committed to it, that's when you see pullbacks like this. Now, could have some follow through, which is why I just started the position. If it gets down below 110 and starts trading around 105, I see that as really good opportunity as well. Their earnings are still growing. I think that puts the stock in a fairly value position where it becomes more attractive to me instead of getting nervous when I see these things fall. Now, ASML looks really similar, falling back below $700 a share. To me, that creates opportunity. And that's one I'm not really starting much of a position on. It's just something I've been keeping an eye on and like to watch because I think they're an interesting company. You know, they are a moat of all moats. They create the product that some of these companies need. However, technology changes. So what I worry about that is, 20 years out, does that mean that their technology is still something that's needed and desired, or have things changed and it's just not something that we need anymore? Now, in the meantime, it's a great item. Like, it's this massive computer chip, or essentially that runs everything that the chip manufacturers use to build the chips to sell to Google and Amazon and the like. Intel is one of their big customers, so maybe there's some issues there. But honestly, they've addressed a lot of that, and it looks like they're still growing. And again, you can't get it from anywhere else, so they're your only resource, which makes it interesting to me. Now, both Amazon and Meta, which started out down pretty good today, have both already rebounded. And I know Meta is actually up on the day, and Amazon seems to be threatening. Google also started out down on the day and doesn't seem to be rebounding quite the same way, so it still kind of looks attractive. But I saw Amazon as a great opportunity this morning. thing is by now, in the time that I get this out, I don't really see it the same way. And same thing for Meta, who's reporting this week, and I'm anxious to see that because, full disclosure, that's my largest position. However, I'm not super concerned either way. Like, I'd like to see it do well, but fortunately I'm in from such a good level. I like, even if the earnings are bad and it dropped $100, which is something that could happen, it really isn't going to impact the position I have on in Meta, and I'm not planning on making any changes to it because that's kind of in my set it and forget it account. And part of the reason that it's the largest position is just how well it's done the past couple of years. So I don't know that I would plow in and buy as much as I have, but since I got in really well, and nothing has changed in my opinion in terms of the overall structure of the company, which is really what I try to invest in the account that's just set it and forget it type of stuff. I want to be an investor in those companies, and while I'm sensitive to the price when I get in, that's the only thing I really pay attention to, unless something fundamentally changes in the company at that point where I no longer see ability for it to grow and expand and continue doing business in the way they are. And even in some ways, if that happens with Meta, what I hope is that in time they transition into a larger dividend paying stock that, maybe they're not growing at the pace that they used to be, but now they're actually paying a pretty decent dividend, and that becomes an attractive thing that you can use to value the stock at that time. It changes the dynamics of the company. And like I said, for now, I haven't really seen anything change, and I think they can still continue to grow. But maybe in another 2 or 3 years, if they've transitioned and they're not growing anymore, well, maybe that means that they'll start paying out the income that they're deriving. And, I was watching Russ from Dapper Dividends, who I like his channel. If you guys haven't checked it out, I'd suggest checking out his videos as well. And I mentioned last night really liking Target and Whirlpool as well as, what was the other one I mentioned? Target, Whirlpool, and there was one, Hershey's, which I'm happy to see all three of them are up today, despite the market being down so much. I think people have been gravitating into the value stocks and the things that were a little out of favor. And I'd be cautious, same thing. I don't know that I would jump into them today when the market is making the moves they're moving. Now, make your decision. I'm not making any suggestion because long term, I think these are good companies. But I do think we could see a bit of a reversal over the next couple of days as people, as it extended too far. Maybe they overpaid for some of the value stocks in terms of right here, right now, and then think, oh geez, I probably shouldn't have gotten out of Nvda just because I panicked when everybody else was panicking. Now, I wouldn't be surprised to see some follow through though, because this will get into the news tonight. When people get home, they'll start to get nervous and potentially put in orders to sell tomorrow. And we're not going to have earnings until I think Wednesday or Thursday for Google and Meta. And if they're strong, that's when I would expect to see Nvidia reverse and start going higher based on earnings are doing just fine. And then here's the example of what I do with a company like MicroStrategies. Now, part of why I picked MicroStrategies is I have no faith in the stock price. I know that sounds really silly, but I really just look at it as a number, which is why I look at it as a trade. I don't know whether I think that stock is going higher or lower. While it is loosely connected with Bitcoin, it can actually move in opposite directions. I mean, sometimes they're selling off the stock to buy more Bitcoin, so you'll see the stock drop even while you're watching Bitcoin go up in price, and sometimes it'll fly way more as a percentage than what Bitcoin's doing. And if Bitcoin drops, it'll drop significantly more, and if it goes up, if Bitcoin goes up, you'll see the stock go up significantly more. So I don't pay too close attention to the stock price in terms of I think it's going here or I think it's going there. Now, I just looked a little before turning on the camera, and it was trading. It was trading $323, but we'll call it $325, just to give you an idea what I'm talking about with the trading of the options and where I see it being attractive. The other thing I like about MicroStrategies is it has very high volatility, which means it moves around a lot throughout the day. I mean, it's not out of the ordinary that the stock might move $20 or $30 in a day. Now, that tends to not happen every day, but that seems to happen often enough that it's really no shock to see it move like that. Well, when it's trading today, which is already Monday, and I'm doing this around, I think it's around 10:30 Western time, so we've passed half of the day already, which means the price has come in a little bit. As little as it is, some time decay has worn off, and since there's less time until expiration, and as the day moves on, that tends to happen rather rapidly because the stock can be more volatile than later on. Anyway, at 325, let's call it, the 300 put gets about $6.50 if you were to sell it at the bid. And the $350 call is getting approximately the same, a little bit less because the stock is $2 off of the middle. Well, between the two, if you bought 100 shares of the stock, sold one of the calls, and sold one of the puts, you're collecting $1,300 for 5 days of trading, or 4.5 days of trading. I know that sounds really simplistic, and that doesn't guarantee making money because there are lots of ways you can lose here. And generally, if the stock goes lower, that's where you're going to be losing. But if it bounces around a whole bunch and at the end of the week is somewhere around where it is now, you haven't made anything on the stock, but you've collected that $1,300, and you can then try to do that again for the following week. If the stock goes higher, if it gets above the 350 strike price, well, you've still collected the $1,300, and you've made another $2,500 for the stock moving from the 325 up to the 350. Now let's talk about the negative and the downside, because most people who talk about options really never recognize the downside. They just talk about how it's free money. Now, to be fair, they're typically selling covered calls and they're selling puts on things that they actually want to own. And in the example I'm talking about, I don't really want to own MicroStrategies. I have the position to be able to trade the options, and I don't want to just sell puts. I would like to be on both sides because I don't know which way it's going, and I don't really just want to collect the premium if the stock goes higher, because I would like to be able to take advantage of that stock move and profit from the movement as well. But the risk to the downside is not only you'll still collect your $1,300 for the call and the put if you hold that through expiration. But as the stock falls below $300 a share, now you're going to start taking a loss, and you're going to take it on double the amount of shares, not just the 100 shares. Because what happens is from 325 to 300, you're essentially long 100 shares if you put on the position I'm talking about. So it's down to 300, you're down $2,500 just on the 100 shares alone. If and when it gets below 300, you will now get assigned another 100 shares. Now, on top of that, you don't get assigned them until next Monday. So you have full market risk whenever it gets below $300 a share until Monday. So if it closes on Friday at $270, you've lost $2,500 just up until the $300 point on the 100 shares, and you're going to lose another $30 on 200 shares once you've gotten assigned the other shares. So you're down $6,000 plus $2,500. So you're down, what's that, $8,500 less the $1,300 you've collected. So you're down pretty big on a stock that's pretty volatile. Now, I know this is just an example, but that could legitimately happen as the stock moves around a good amount. So $8,500 less $1,300, you're down $7,200, and it's only been 5 days. Now, what I suggest from doing there is then selling calls against the 200 shares that you have. And if your pockets are deep enough, I would continue with the strategy and sell another put. The real risk in a strategy like this is a one-directional stock, some ways in either direction, because your upside is capped. You can only make the 2,500 and the 1,300, and if the stock just goes higher and higher and higher, you're likely not to get in the trade again. And if it just continues to drift lower, in the example where closes the week at 270, you're now long 200 shares, even if you start selling out calls, if the stock continues to drift lower, you're just going to get in a worse and worse position. So there's a lot of risk to trading the options. I like the volatility. I like the action. I don't know that I recommend it for anybody else. But I see the amount that's in the options from it being so volatile as an opportunity to collect a good amount of premium each week. So if you guys want to try, feel free to communicate and tell me what you're looking at and what you're trading. If you have more questions about how I come up with my strategies or why I decide what I decide, I'm happy to talk about any of it. I hope your Monday isn't as bad as the NASDAQ was. I hope you're enjoying your day and doing something other than maybe watching the markets and worrying about it. And if not, well, hopefully it works out well by the end of the day. Anyway, do me a favor if you haven't already and hit that thumbs up button, hit the subscribe button, like it, make some comments and let me know what you guys think. I don't know that I'll put in those captions and the little, I'll probably do the captions, but I don't know I'll put in the little thingies here and there, maybe just a subscribe and a like and whatever else. Anyway, have a good day.